Good afternoon, ladies and gentlemen, and welcome to another very interesting topic and session for the ACT. This afternoon, we're going to be talking about evolving towards a real-time treasury operation, considerations for treasurers. And I'm really fortunate that I'm joined with a very important panel this afternoon, and I'm sure you'll really enjoy hearing what everybody has to say. From the corporate world, we have Peter Jones, who is the Financial Services Treasurer for Fidelity International, and James Kelly, who is Group Treasurer from Pearson. We're also joined by two speakers from our sponsors, Barclays. We have Martin Runno, who is in the Payments and Digital Manager of Payments and Digital area, and Yira Hagopian, who is in the Liquidity Solutions area of Barclays. So to start off, my name's Fiona Crisp and I will be facilitating the session. I am an ex-president of the ACT, but I'm a treasury consultant and I work all over the place, helping corporates mainly, but also financial services companies, managing their risks or anything to do with treasury. So a bit of a jack of all trades. But I'm going to ask each of the panel members to just briefly introduce themselves now. And if I could start with you, James, please.
Sure. So I'm James Kelly. I'm Treasurer of Pearson. We're a FTSE 100 listed company, turnover of about £3.5 billion, operating profits roughly 10% of that. We operate in sort of 10 to 15 major economies, and in total in sort of around about 50 economies around the world, with particular concentration in North and South America.
Thank you, James. And now on to Peter.
Thank you, Peter Jones. I'm the Financial Services Treasurer for Fidelity International. We're a global investment and retirement services business, looking after approximately 740 billion of client assets, 2.5 million clients, 25 plus countries, 17 core currencies that we operate in. And my interest is particularly in the sort of cash management side of the business, how that's evolving and the scale of settlements that we undertake on a daily basis.
Good, thank you. And now maybe on to Martin.
Martin needs to go off mute because his dog was just outside the door. So I'm Martin Runno, and as you can see, I'm working from home, as well we all are at the moment. So I'm the product head in Barclays Corporate Banking for payments, transactional foreign exchange, and everything digital. So all the channels and the funky tools that we use. And I've been in cash management for quite a while, almost over 20 years now, and with Barclays about a bit more than 2 now. So plenty of experience in this space and looking forward to this session. I don't think I need to talk a lot about Barclays. We're a pretty decent sized bank, and hopefully most of you will know us, and we're a sponsor, of course.
Thank you, Martin. And over to you, please, Yira.
Thank you very much, Fiona. So I'm Yira Hagopian. I'm responsible for liquidity management at Barclays Corporate Bank. I manage the services that help our clients manage their own liquidity, but also obviously a large chunk of our balance sheet because I'm responsible for all the deposits of our corporate clients as well. So that's me, and I'm not going to talk about what Barclays do either. So
excellent, but maybe about some of the experiences from some of your customers, I think is
absolutely
excellent, as we've spoken. Good, thank you. Okay, well, we're going to go into a little bit more detail now, some of the detail of what it means and what it means about moving towards a real-time treasury operation. And James, you've got a significant amount of experience in that personally with your work at Pearson. So I'm going to ask you to just give everybody a flavour of what you've been doing and where you are at the moment.
Sure. So welcome everybody, and thanks very much for joining. So I think we're well and truly, I think the journey analogy is the right one. I think it's one of those things that there are different elements of the journey to real time. To give a bit of a flavour for the way that Pearson's set up, Around about a third of our revenue comes through sort of online payment routes. Most of those are still dominated by the card rails, and so typically that clears over a 2 to 3 day cycle, although we have visibility relatively early. So one of the first things that we've tried to do is we've tried to pick up that data earlier where we can, so that we've got that from a forecasting perspective, and we know that, you know, in 2 days time we're going to have this much money available. We've then got around about a third again that comes in via BACS and ACH. Again, you know, those rails are the ones that you would hope that over the next sort of 2 to 3 years we'll start to see more going to the real-time payment methods, although we know that take-up can be quite slow and take a while. You know, as demonstrated by the UK, you know, we saw an uptick, for example, when the faster payments limit was increased to 100,000, which should actually, you know, that would allow for something like 80% of our receipts. And I would love to have 80% of my receipts coming in via faster payments. That's not yet the experience, but we're getting there. And certainly, you know, I think it's incumbent on us to try and encourage people to use those faster payments routes. I do think that some of this is about how we encourage people, and it's through the whole ecosystem. So, you know, when people are selecting a payment method, our bank's set up to route via the fastest possible payment route. And then finally, we have the slow coaches. You know, there's quite a lot of revenue, particularly in the US, that still comes in via check. And so, you know, again, we can get visibility on what's coming, but it takes a while to clear. So there are a variety of stumbling blocks in a way to getting to, you know, the nirvana that I'm hoping for, where somebody sends us some money and we receive it, and that's the end of the transaction, you know, the blockchain world. But I think where big strides are being made is in data. You know, I think that, you know, we use MT942s for our major receipts accounts. That means that we're near real time. We haven't yet got to a position where we're using APIs, because actually the delta isn't that huge for us. Interest rates are relatively low. You know, the benefit of receiving updates every second rather than every hour or something, so, you know, isn't necessarily there yet. But again, that means that we've taken some quite big strides on that journey. And I think, you know, we're all used to a world of real time to an extent anyway, where, you know, we're able to check banking platforms, etc., to check on balances where you know, particularly over year ends and things, checking whether receipts have come in. And I think with some of the innovations around, you know, some of the Swift products and others giving much more up-to-date information on receipt status, etc., that's really helpful and really kind of encourages that real-time information and real-time risk management, which I think is the kind of big benefit. I think the other thing that's really interesting at the moment is the enrichment of the data with some of the new payment formats. So as well as going more real-time, the information becomes real-time, because one of the big challenges that we have is that, you know, typically we'll send 6 or 7 invoices to the same customer. They'll pay 5 of them in one batch. There'll be 2 outstanding, and we have to wait for a remittance device and match things off. And it's a bit of a manual process. Again, there are, you know, great tools that can help with that, but you're still looking at a process that's, you're taking disparate information sources. You know, moving to some of the new file formats, you really start to be able to join all that up and actually, you know, reconcile real time, which means that the embarrassing situation of calling a client and saying, you know, hello, you owe us £3,000, and them going, no, I paid you 2 days ago, should well and truly be at an end. You know, where it gets more challenging, I guess, is actually in the treasury space, where you get into the cross-border piece, because I think, you know, within jurisdictions, I think there's a growing move to real time. So within Europe, within the US, within the UK, you've got some really good infrastructure. Again, you know, India and China, there are some really good real-time solutions, but where you want to move between jurisdictions, that cross-border is still quite sticky, and it's still, you know, the old process of, you know, bank A sends a message to bank B, and then the funds pass by at the end of the day, etc. So that's quite a slow process. And so again, you know, the more that we can do to join those pieces up, the better. But I think, you know, things are getting there. I think what we're seeing is that the, you know, treasury management systems and things are slowly adopting some of this technology. You know, the big one I'm looking out for is being able to use APIs direct into my TMS rather than via an integrator, because I think that will be a big help. So lots of excitement to look forward to. You know, I think we're probably about a year away from really going big bang on some of this, but I'm watching with interest.
And rookie's error, I'd muted myself and struggled to unmute. James, thank you very much. That was a really interesting introduction for us to put the scene from a corporate perspective, and I think everybody will recognise that that we're all know where we'd like to be, but we're not quite there yet. And I think that's very much the same across the board.
Yeah, I think some of it is, you know, unpicking processes. So, yeah, you know, it's moving from everything being set up for 940s end of day statements to a process where you're bringing in batches of transactions rather than here's the whole lot. So, you know, being able to make that work. Great.
Well, thank you very much, James. And I'd now like to move on to Peter. And well done. He's come off mute very quickly and swiftly. Thank you. So Peter, James, very much from very true corporate world. You're the sort of a corporate, but in a financial institution in some ways. And be really interested to see, because you've got some very large transactions and payments, if you could just give us an introduction to some of the areas that you're building on.
Yeah, well, you know, I think it picks up on some of the themes that James touched on, but for us as an NBFI, the payments are our point of contact with our clients, essentially, and our other stakeholders. You know, that's how critical they are. You know, if we don't meet that, there's no other service to deliver. There's no other measure really in the end to deliver by. So what that means is that to a certain extent, we've been in the real-time treasury space for a long time. I must admit, when I moved from Burberry, a more traditional corporate 14 years ago, into Fidelity, I was sort of equally shocked and horrified by the implications of that move, in that, you know, the clearing day starts very early in Asia, and also 6 a.m. for New York, and it rolls throughout the day. And what real time for us then meant was all the time, which means having a dedicated cash management team who have to forecast and reforecast. The real difference, and James touched on it, was the availability of data and how that's evolved over time. And I'm hoping that many of the corporates listening will be able to leapfrog the stage that we went through, and go straight to the self-updating TMS dashboard that gives them that view without having to manually crank the handle, bring data in from different systems. But I was interested, as James said, you know, the move from MT940 to MT942s, and I can, you know, thank my friends at Barclays for our 5-minute window. I don't think there is you know, much of a benefit for us of being tighter than that, and that may hold us back from going fully down the API route for the receipts in that way. But certainly in terms of speed of application of funds from clients, that's really important to us, because either we're in a regulatory environment that means that if we can't prove it's ours, we have to ring fence it and it goes off our balance sheet, and yet we'll have made the onward settlement. Or indeed, if we can't apply it to the client's account properly, they can't access it, switch and move. So the enrichment of data, and then ultimately, hopefully, APIs that facilitate pooled payments, particularly at the consumer level, will allow us to serve clients that bit quicker, that bit better, and everything that eliminates the sort of reconciliation and manual check effort that we do will make a huge difference to us. But I'd like to think that generally for corporate treasury teams, it can put them in a space, if you have the right TMS integration, to achieve a real-time treasury without having a cash management team of 3 sat there, you know, from 8 till 6, working their way through managing the daylight overdraft capacity.
Thank you, Peter. That certainly puts things into perspective, and I'm sure that many people will really pick up and recognise your thoughts in terms of, and you both talked about data and the enrichment of that data, and actually finding out about when you've received funds in, and making sure that you can actually then make use of those funds, but most importantly to be able to allocate them correctly to your customer or supplier. So thank you. I'd now like to hand over to Martin, and ask Martin to just give us a little bit of a flavour for something about the payments and digital which Barclays can provide, and which your customers are interested in.
Yeah, I was going to say, instead of trying to make it the big Barclays sales show, maybe I'll comment on a few things that were said by James and Peter, and share a few observations of what's happening in the UK and actually maybe cross-border as well, right? Just listening to both James and Peter talk is like you are basically transaction bankers in disguise, right? Because you're hitting each and every one of the things that I feel are quite relevant at the moment. Maybe so I'll try to kind of divide it up with what's happening in payments, and then digital, and then this whole data API piece, which comes neatly into play between those areas, right? So if you look at it from payments, then real time is definitely real. It has been, well, I mean, we can have a nice theoretical debate of what real time really is. Is it 5 seconds, 10 seconds, or nanoseconds? It is for what we're trying to achieve mostly irrelevant. Let's just go there, right? So faster payments have been around in the UK for quite a while, and I would venture to say have been the first large-scale, economically viable working real-time payment scheme in a major economy for quite a while. The rest of the world is catching up, right? Some kicking and screaming, some very enthusiastic. European Commission has had to up the pressure a little bit on the European banks to get the Sepa Instant payments going. For those of us who have been around, when the Sepa came around, it was kind of the same story, right? The markets will push it, and then the European Commission did push it and mandate it, right? So Sepa Instant payments, being able to accept them, has been mandated now for all banks. So that will surely help that kick off. And they've also actually increased the amount limit to, I think, 100K now, which again is a bit similar to what we've gone through in the UK. So take up is there, and just looking at what has happened through the pandemic, through the crisis and everything, then faster payments is the only payment method in the UK that has actually still continued to grow double-digit. Even, you know, if you look at, it's quite interesting. You look at the stats, the first lockdown, things have dropped off. No surprise, check. And cash, like ATM transactions, were down, I was going to say 15-20%, even worse when the first lockdown happened. And if I got my numbers right, then faster payments volumes have still been growing at 17-18% over the last year. So we continue to see the growth, right? So that's validation of a couple of things. One, it has certainly managed to get into the mainstream. It works well. Whenever I use faster payments in my Barclays mobile app, right, the message popping up that the payment has been received by the Benny usually appears like within literally me pushing the button, and boom, it's there, right? So that's really well. And on top of that, and we did talk a bit about that when we met with this group, we've done a lot of work on making it safer to use for consumers, but also for us on the corporate end, right? So confirmation of payee has been quite a major step. Not without pain implementing it, I shall say. As a banker, we had quite a project running. It's still running, but it is quite clearly a great asset in fighting impersonation fraud, right? So going in there into your app, online banking app or mobile app or whatever it is, and trying to pay James or Fiona, and there's a big red screen that screams at me, this is not the person you're trying to pay. It does help, right? It's amazing how people still push that button and say, I'm going to pay that person anyway. By the way, not only private individuals, also some of our corporate clients that we then call to alert them of the fact that this is most likely fraud. But anyway, so I think we've been really down the path, and in that sense, it is quite becoming mainstream, right? The cross-border point, James, is not lost on me, right? So faster payments or real-time payment schemes are literally popping up everywhere. In the US, there's a lot of effort on US real-time. But most of these payment schemes, or many of them, notably the European one, do not like one leg out type transactions, right? So paying from outside of the EU to the EU using actually even Sepa is if you're not in the zone, is something they don't like, right? Faster payments is open for international transactions. It just requires us all to be a bit more vigilant and structured in terms of making sure that they're flagged as cross-border payments, so that all the information you need to fulfill all the different rules and regs are there, right? But I do see, and I think it's quite interesting, there's a number of industry-wide initiatives and projects ongoing at the moment that look at connecting, some of these real-time payment cross-border flows with each other, driven by either SWIFT or some of the larger infrastructure players. So it's very interesting, and same as taking sort of the friction and uncertainty out of cross-border payments, where we've seen GPI, this payment tracking feature. There's so much more to it at the moment, but that's really brought us forward, right? Taking some of the scariness out of these payments and maybe switching over to digital. It's not only about the speed of execution and making sure it happens, it's also about having good, rich data that allow you and the people in your companies to actually know that something has happened, right? So as an example, we have gone live with our GPI payment tracker now in our online banking, right? It's been quite useful for our clients. It's a great client experience, something I'm very passionate about. And yes, it does obviously mean that a lot of people don't call us to want to know where this payment is when they can look it up themselves, right? But even that, right, talking about real-time, sort of this real-time mindset that's in all of us, because we're all slowly turning slaves to these little thingies here. Right, things kind of have to happen now, right? Who wants to pick up the phone and talk to anyone to explain to them, I need to know where this thing is, right? If you can look it up yourselves, people will do it, right? So I certainly will. But yeah, so that's certainly quite cool. I think you both mentioned API, so I need to talk about API. API, we have that debate a few times. Is API going to replace like traditional online banking or even host-to-host or Swift integration into ERP systems? Maybe. Not anytime soon, in my view, but it's a fantastic addition for specific use cases, for specific journeys. And I think I would like to look at it that way. Ultimately, yes, I do expect that in the not too distant future, the standard treasury workstation providers and ERP system providers will try to have their bouquet of APIs that they can just consume. So, integration becomes easier and quicker for all of you who have been going through a treasury workstation or ERP system implementation across a number of banks. That does tend to take a little bit of time and be quite painful. So, I can see that happening, but we do have APIs live, and the API, I think, connectivity is extremely powerful in combination with real-time payments and real-time account information. And so all the clients that we have live and most of the use cases and interests that we see is really transactional driven, meaning the payment or this information I'm getting from the bank account statement, whatever it is part of a transaction that I am doing with my client, right? There's a huge shift to direct sales to corporates, to getting this relationship going. There's a whole gig economy, new economy. And where you think about that as a sales argument, whenever I'm doing a transaction where as part of that transaction, I need to do a payment right now. And while someone's looking at the app, they get the status payment is made, etc. It hits their account. That's where an API is super powerful. So we do see right now when we have these API discussions, we're often not primarily talking with treasury, but with specific departments within our clients that are looking at this as a, as a product development idea. I think I've talked way too much. Okay, sorry, James.
Martin, thank you. Sorry, James, did you have something to add there?
I was just going to say it's companies like Deliveroo who've really benefited from APIs on payments and real-time payments. I know that a number of them, offer to pay people effectively per delivery at the point that it happens, and that's a really cool piece of tech. I'm looking forward to being able to pay our staff by the day or whatever, rather than whether I should want that from a working capital perspective, I'll worry about later.
I was going to say, so Jira is going to talk about liquidity and what this means for real time, but I do think that it's really where this is a transaction you do now, etc. It's great. Salaries, for example, or normal third-party vendor payments or whatever you do through BACS now, that'd be the least of the stuff that I would look at, right? To go APIs, right? They'll touch that last. It works. It's fine. It's not super urgent.
Good. Well, Martin, a great run through very quickly of some of the key things that are available now, but also coming in the future. And I think that's really important for our treasurers to think about, particularly, and we've mentioned quite a bit about treasury management systems and the linkages between those and the payment methods. And maybe we can come on to thinking about some of those later if there are any questions on that. But I'd like to now just introduce Jira and ask her to give us a little bit of background to the areas that you're particularly interested in from a liquidity perspective.
Yes, well, I think it is an important set of developments for liquidity management, because liquidity management is actually an output at the end of the day. It is very much the end result of a series of transactions, payables, receivables, all the things that happen in the normal working capital cycle. So if those things are changing, then liquidity management sort of has to adapt as well. And I think it's also fair to say that it's probably historically been quite a batch sort of process, very much dictated by cut-off times. Traditionally, an end of day, an MT940, updated with some MT942s if you're lucky, working towards a cut-off time, and then you're done. And that's always worked very well historically, but it sort of works on the assumption that the day actually has an end. Yeah. And I think what we're seeing with instant payments and some of these other developments is that the day actually has no end, and even if it has an end, whose end of day are we talking about? Because we are living in a global economy, and I know we can have a discussion about whether the pandemic changed that or not, but I think it was always a bit of a one-way street. So we do now have this concept that the working capital cycle is very much a 24/7 cycle. Liquidity management practices need to reflect that, and I think there are consequences if they don't. And the consequences are both there are opportunities, but there are risks involved as well. I'll start with the opportunities because it's probably more interesting. So I think the biggest opportunity is obviously that instant payments materially shorten the settlement cycles, as James and Peter have both alluded to already, and that really enables essentially the same liquidity to be used several times over, and increases that velocity of cash. And there is a monetary value to that. Now, that monetary value may be opportunity cost, because you're not having to hold so much in the first place to fund your transactions. Or actually, if you're in a regulated industry like Peter, it could actually have a very real cost. It could even potentially lead to capital add-ons and all sorts of things. So there's definitely an opportunity through more proactive management of liquidity as a result of these changes in the underlying processes. I think the other thing that we need to be really, really clear on is that there is also a risk, and that risk is very much that if you don't manage this proactively, then you will find yourself in a situation where you might actually have to hold more liquidity because you don't quite know what's going to hit you. Things are happening very, very fast. And so effectively, you end up with a bit of a buffer effect. Now in the very low rate environment in which we're currently living, probably nobody cares that much about that. James, I think you mentioned that, and obviously the opportunity cost of holding surplus liquidity on an account is not so damaging, though I have to say I'm not sure that all the bankers in the room will necessarily agree that is a beneficial thing to do in this low rate environment when there are balance sheet implications for the amount of cash that everybody's holding right now. So yeah, the current situation means that we're quite prone to ignore this problem. But you know, rates will rise one day. We're already seeing inflationary pressures, and we may well find that those opportunity costs increase, and our shareholders start asking a lot of questions about why we are having to use so much working capital to fund an activity that could actually be managed much more tightly. So I think that there are consequences, and there are things that need to be managed very, very proactively as the situation evolves. Now, obviously, this isn't a big bang. You know, there hasn't been wholesale adoption. Not every country is on the journey yet, but it is slowly coming, as we have seen with faster payments. As Martin said, you know, these things do gather momentum, and it's very important that I think that people do adapt. Obviously, the process will be faster in some industries than it will be in others, and it will also be much more impactful. And I'm going to have to stop and take a small drink whilst I just clear my throat. Apologies for that. So I mean, I think those are the main sort of immediate consequences from a liquidity management perspective.
Fiona, you're muted.
Another rookie error, I'm sorry. I was just going to say that, thank you, Yira. And James, I think you had something you were going to wanted to comment on Yira's.
So I think everything that Yira said, I think is right. I think the reality is that it takes a little while to get set up to move to real time. I think the reality is that for most corporates, there is an element of prioritization, though. And so one of the challenges is, you know, trying to make sure, you know, for example, in our own business, where our technology function is in high demand, you know, we're an education technology company at heart, effectively. And so every time I pull IT people onto a treasury project, I'm pulling them off something else. And so there is a bit of a kind of positive versus negative piece. But I think the reality is that taking that journey incrementally, so that you bring on a little bit of risk, you bring on the data, you bring on the technology to be able to cope with that, means that you should be able to manage things like challenges around liquidity buffers, etc., so that you don't end up kind of diving off the cliff one day and suddenly going, oh shit, we're real time, excuse my language, and finding that, you know, you're suddenly dealing with all of those challenges in one go.
I think you're absolutely right there, James, and thank you. Prioritization is key for each of us in this determining where we're going to go next in our journey towards real-time payments. And what I'd like to do is to just ask a question of both the corporates and then to the banks, of whether you see banks actually going to be entering the space to provide APIs or gateway solutions to drive adoption, or whether they might be partnering with fintechs to do that. Peter, I wonder if I could ask you for your comments first.
I think the degree of integration required with our other processes means that we're going to have to be very comfortable about the partner who's doing it. because we're putting our regulatory license on the line essentially, and that means that if it's not a fintech we know very closely or we've invested in ourselves, then the obvious thing to do is to work with one of our major banking partners and a relationship they have, and we're certainly starting to see those come through. All of our sort of major, certainly the GSIB banks, have got departments, functions working closely with where they're co-investees or they've taken out a fintech. So I think that will be, it's the trust piece.
Very much so. And continuing on the corporate theme, James, is that something that you see from any of your banks?
Yeah, I think it's one of these things. I think a lot of the banks are interested, and they have bright people like Martin deployed to think about this and think about the future of the technology and how that works for corporates. The challenge is that the vast majority of them want to do it only with you, and therefore they want you to work with Barclays exclusively or Bank of America exclusively or whatever it happens to be. And the reality is that most of us have wallet to share out between multiple banks, and so one of the big problems that we have is about the different integration methods, the different data formats, etc., and trying to make sense of all of that, which perversely creates opportunities for fintechs to sit in the middle and help kind of bring all of that data together into a set format. But I think, as Peter's said, the big challenge working with fintechs is actually just getting them through our CISO department and getting our IT security teams comfortable that that's a sensible way to go. So, that combination of things where banks don't want to play together and fintechs have to be of a certain size, scale and reputation in order to be able to be part of the game, means that it can become difficult to actually find a way of making things work in the short term.
Thank you. So maybe I can pass that on to Martin and say, from your perspective, Martin, an opportunity or a threat?
Oh, kind of both. But I'm definitely glass half full kind of guy. I think it is an opportunity, because whether we like it or not, at least in the larger corporate space, right, you have not been competing as much on the Barclays Eagle logoed online banking tool, right? We have been living in a world where corporates are on Swift, or we create host-to-host connectivity, and we do know it's a multi-bank environment, right? And we do know there's such a thing as wallet, and so I think it's been a bit of reality. It's not to say that you cannot win or lose by having a nice intuitive online banking tool or self-service tool set or other things that just stand out a little bit. That's certainly what we're trying to do. And it's a journey. I think James said it, talked about the journey. It is always a journey, right? On the API front, it's a bit funny if I think about it. So in terms of how much work and effort it is in theory versus setting someone up on a host-to-host connectivity or Swift, it is much, much easier for us, right? And for some technician there as well, right? I publish my API specs. You want to do faster payments with me? We have our sandbox, the developers can go in, play, and then they can go live, right? It's relatively simple, and in theory, it shaves off months of like a deep integration work. Having said that, if you're sitting on the other hand and you have to integrate with not just us, but with 10 banks, I can guarantee you that the 10 API specs are going to be 10 different ones because there is no real standard, right? So I think, so in that sense, yes, there's room for techies or fintechs to do that. It's not the juiciest of business, right, to play in the B2B space for most of them, right? So I think there'll be more the Treasury Workstation, ERP, the SAPs, Oracles, current TWS providers. They'll probably go and push it. And together, I think I was having a discussion with Swift about this the other day. I think there's a bit of a need to come together in this core petition space, and could we not possibly agree some baseline specs that are all the same, so some quasi standard for APIs that should make life easier at the end of the day, right?
So on our wish list then, Martin, an API spec that can be used across the board.
If anyone attended the co-hosted session, Vodafone and Swift, I think it was either at 2 o'clock or 2:40. They're working on just that. So hopefully that wish will be fulfilled.
hopefully not too far off. But yeah. I'm going to turn now to one of the questions that's come in from the audience. A very interesting one here. I think, Jira, I might pass this one to you because it relates to liquidity in some ways. How can you manage an FX hedging program with real-time payments? Now, there's a very interesting concept, because we've been talking quite a lot about, most treasurers are working in cross-border. We've got international payments, and how do you manage your foreign exchange hedging at the same time as managing real-time payments?
Well, I mean, I think this is a problem which has always existed in some ways. It's maybe real-time payments makes it a little bit worse, because things are happening faster and maybe less predictably. But actually, a lot of hedging is done off the basis of plans, essentially. And a lot of it is done at a fairly macro level, often using options and instruments like that, rather than forwards and so on, based on anticipated flows, which are then adjusted as better data becomes available. But I think the second point is actually that better data would help better hedging as well. If better data is available and patterns can be seen and analysis can be performed, then actually the information you probably have is better than you would have had in the past. But I'd be interested to hear what our practitioners think about it as well, obviously.
Thank you, Vera. I was just about to pass that one over to Peter, and you were very much recognizing what Jira was saying.
Well, absolutely. I think Jira's completely right. The thing about real-time payments is that you're not going to pay anyone any earlier than you want to. And you're not going to pay them any earlier than you should. You're just going.
I'm just worrying. Is it me, or is it Peter's connection?
I think it may be Peter's connection.
It may be Peter's connection.
Peter was not going in real time.
No, very good. Thank you. Okay. Maybe James, I wonder if I can ask you to perhaps join.
Sure, it's me.
Oh, sorry.
James?
Yeah. So just in terms of FX hedging programs, I think that point is right about, the data's more real time and you've got more accurate flows. But I think the reality is that most people will hedge to the day or to the week or to the month rather than to the minute. And yes. I'm not sure that particularly changes. If you've got a debtor in your books, then again, it's incumbent on having quicker reconciliation so that you don't end up double counting the debtor and the receipt at the point that it comes in. But and again, on the payment side, at the point that you remit the payment, that you can't cancel that, but effectively you're just moving between buckets, so it shouldn't complicate things too much.
No, most people not doing real-time foreign exchange hedging is effectively the issue.
Yes.
Yeah. Okay, understood. Now here's another interesting question. I'm going to have to reach forward because even with my glasses on, I can't quite read this one. It's saying it's a very interesting one. APIs switch the power from the bank holding the data to the corporate which owns the data. Is this why the banks are reluctant to offer APIs to corporates? Oh, Martin, shaking your head there.
Yeah, I don't think so at all. And I'm not sure this is actually entirely true, right? So talking about large corporates, and you've always held your own data. You certainly own your data, right? It's not like what we own. I think as banks, we could probably make more sense of the data if we were a little bit cleverer, and that's certainly something that I'm looking at. But the API is a matter of connecting. It's quicker at the moment when you want it, etc. I think I can only speak for ourselves. I'm not reluctant to offer APIs. It just takes a little bit of time to build all the APIs and get it off the ground. And we are live with a number of them. But the goal is that everything that you can do with us through traditional channels like online or host, you will be able to do with an API, but it may take me a little while to get there. But yeah, I would say it's not about the power of the data, although we do need to get our act together there for sure.
Very much getting that together, very much about moving data, getting connectivity, matching up what's in our treasury management systems, connectivity then with our banks. We are out of time. It's been a really, really exciting session, and I'm sure that we could actually carry on with these discussions for quite some time now. However, what I would really like to do is to be able to thank all four of you for your contributions this afternoon. So to Peter, to James, and to Martin and Yera, really appreciate that. I'd love to thank Barclays for sponsoring this session this afternoon, and to ask anybody who is joining our members to complete the session, the feedback session, because that's really important to us when we're trying to plan the sort of discussions and conferences that we're going to be doing going forwards. So thank you to everybody, and I look forward to seeing you at some of the later events. The conference goes on again tomorrow, so please have a look at the timetable and make sure that you allow yourself plenty of time to share in with what is a very exciting conference so far. So thank you all very much indeed.